Hi, you guys. Welcome back to the show. My name is Brad. This is the Firefighter's Financial Toolbox. Today, I want to talk about something that kind of aggravates me a little bit. People at work, I have people coming up to me every day saying, "Hey, are you invested in crypto?" Now, you guys know I'm not against crypto. I don't understand it, and I don't invest in things that I don't understand. But last year it was the same thing. Remember when the ARK Innovation ETF came out and Cathie Woods was the messiah of investing for a while? So I decided I would do a little look back and see how those separate funds have fared. Because first of all, we're going to look at the ARK Innovation ETF, and we're also going to look at the Bitcoin Futures ETF. These were ones that were super highly touted last year as the ETF to be in. And I want to take a look and see how they've done. And I think it's going to reiterate why sound investing, slow and steady, wins the race. Remember, a lot of these things, people were jumping in as they were going up, and they did go up huge for a while. But let's take a look and see how they ended up. Okay, so we're in cnbc.com because I like their platform makes it easy to see. So first of all, let's take a look at Bitcoin. This is the ProShares Bitcoin Strategy ETF, or the Bitcoin Futures ETF. This is ticker symbol BITO. Now, first of all, we see that right now it's at 2388. Now, I'm going to be looking at 1 years and further back. Now, this, remember, came out last October, so it hasn't even got a full year. But if we look at the beginning, we see that it opened on October 18th at $41. Well, it opened at $40.88 and it closed at $41.94. If we look at it today, you guys, it's $23.77. So it's lost $18 a share, which, okay. So it looks like $8.5 million in volume. So not a huge, doesn't show the expense ratio, you guys. But if we were to look really quickly, and let's Google BITO expense ratio. Oh, look at that. 0.95%, you guys, almost 1% for that expense ratio. So you're giving 1% of your earnings back to them without doing anything. And it looks like you're giving them your losses back right now. So this is, again, one example of what I'm talking about. So let's look at the ARK ETF. This is the ARK Innovation ETF. This is the one that got Cathie Wood on the cover of pretty much every investing channel. And this is ticker symbol ARKK. Now, if we look at the 1 year, we see that at its high, it was back in February of 2021, so almost a year ago, it was $156.58. It's now down to $68.91. So you're talking it's lost $90 a share. Now, this is one I want to go back and look at. Now, had you been in the beginning, right, and this goes back to 2017, so it's got a 5-year counting. Back then, it was a $23.14 investment per share. At its high point, and the high point for this one was, again, last February, it was $156. If you were at the low back here, remember when we had the March low for the pandemic, right? The March drop, it got down to $42.90. Now, I suppose if you had bought in this period right here, you're a pretty happy camper. But if you held on thinking this was going to be a skyrocket ETF to the moon, you were sadly mistaken. And now you've lost about $90 per share. So you almost quadrupled your money if you bought at the bottom. But if you didn't get out, you've only won extra money, not even won extra money since then. It's about a half extra money currently. So what does this mean? Again, you guys, I'm not bashing either of these ETFs. I think some of the fund holdings this, Tesla. I hold Tesla individually. Now, again, this is another one where your expense ratio is 0.75%, you guys. So that's 0.75%. So if you make 5%, you're really only making 4.25% because you got to pay for that fund, right? On average, let's see, it says about 10-day average volume is about 32.8 million. So still a lot going back and forth, right? But I think a lot of this was on Tesla. And as you guys know, currently Tesla is also down, which doesn't help my feelings. But this is the nature of the stock market, you guys. The stock market goes up and down. And if you think it's only going to go up and there's no downside, reality check is coming. I don't know when we're going to have a crash. I know that we will at some point. It's the way the market works. Now, I'm not saying it's going to happen today, this week, or even this year. But there's lots of stuff going on that could cause it to. That being said, I think it's important that we all have good investments. Long term, you guys know I'm an index investor for the most part. I do have some individual dividend stocks that I also hold, as well as a couple non-dividend paying individual stocks, but those are a very small part of my portfolio. As far as crypto, I'm not completely against it. I just don't understand how it works yet. And as I said, if I don't understand an investment, I don't put my money in it because I want to understand how my money is working for me. So next time somebody tells you, hey man, did you invest in Dogecoin? Ignore it. A lot of that stuff is momentum based. A bunch of people pile in at once and it goes up fast. Eventually it's going to be realized that it's overpriced and it's going to crash again. Sooner we all realize that, the safer everything's going to be. All right, you guys, I hope you got something out of this. If you did, do me a favor. Drop me that like. It really helps the algorithm. If you're not already subscribed, you know the deal. Hit the red button, ring the bell. Again, my name is Brad. This is the Firefighter's Financial Toolbox. If you guys have any ideas for upcoming videos, put them in the comments. If you disagreed with me on these particular ETFs, put them in the comments. I like to hear from that. You guys, I learn from you as well as you learning from me. All right, we'll see you again. Thanks.